myself Vaibhav. In today's session of Market Movers, we will talk about the USD, which is delicately poised on the crucial levels, and a break can happen on the either side depending on the instrument against which you are trading it. As this session is getting underway, we also have Mr. Jerome Powell's speech at the Jackson Hole Symposium, in which he is going to underline the change in the FOMC's monetary policy, and here the key area of focus is the change in the inflation targeting regime, and as was the case earlier, the mandatory target of 2% is likely to be changed to the regime, that is average inflation targeting, and here that means the Fed might allow the inflation to run higher, about 2 percentage point for good enough time to compensate for it being below 2 percentage point. So because of that, we might see the interest rates staying lower for a lot longer period than what were anticipated couple of months back, and this is the expectation, and this is likely to keep the USD on the weaker side, and let's see how things will shape up. We also got the initial jobless claims for the last week, and the jobless claims have actually gone down to around 1.006 million, and these are lower than the prior week's numbers also. So you can say that for the week ended 22nd of August, the job market has improved, though not much. We are still seeing initial jobless claims of more than 1 million. So we are still far away from the total recovery. Now let's see how technical things are looking up, as we have these fundamental driving factors having exerting more influence in today's trading session. Let's start with the USDJPY technical outlook. This is the daily time frame chart, and USDJPY has been consolidating around 106 levels for last couple of days. In yesterday's session, it tried to get past the 106.5, but it didn't really succeed, and we saw the selling pressure again pushing it back towards 106. In today's session, it is finding some buying momentum closer to 106, but it hasn't been really good enough to propel it on the higher side. So I think mostly we will now have to rely on the lower time frame charts to see if there are any emerging opportunities for us to adapt a scalping approach in the USD JPY. Coming to the 4-hourly chart also, we have this central pivot point running through the current price action. Here, the central pivot point of this month's pivot point series is at 106.09, and for last couple of sessions, the price action has been on the both sides of this key marker for deciding whether to go long or whether to go short, and that's why I said that the USD is delicately poised in a fundamental as well as in a technical manner. So here we have to look for the break on the either side, and depending on the key break, we will have to decide on which kind of trading setup or trade direction to adapt. And as the things stand, we are indeed seeing some support on the lower side. So I would not say that this is the time to go short on the USD JPY. Of course, dollar is on the weaker footing, but USD JPY is not the currency instrument to go short on. And rather than that, if things hold well, we might even think about going in for some scalping trades for the long side. So let's see what is the immediate area which is likely to act as a support, and here we have these three crucial support zones lining up around 106. We have these lower band of upward moving channel, the price trajectory, and along with that we also have the confluence of 200 and 100 SMA passing around 106 zone, and also the 200 SMA is on the lower side and it has acted as a good support in today's session, as we have seen consolidation happening in the USD just above that zone. And now the USDJPY is also trying to get on the higher side, but as I said, we have Mr. Jerome Powell's speech coming up, and because of that, we will have to kind of sit on the sidelines. And if after the speech we see some bullish momentum creeping in the USD then of course we can think about going long in the USD with possible targets for around immediate swing high, which is around 106.5, and on the lower side the stop loss can be just a little below this immediate swing low, which is there around 106.80. So here we will not be going in for big swing trades, but the approach will be to look for scalping opportunities where the stop losses as well as the targets are likely to be lot sharper than usual. So for a risk of around 25-30 pips, we will be targeting almost close to 50 pips, and that will give us the risk reward ratio of roughly 1 is to 2. Moving on to the Euro USD's technical outlook, the Euro USD has been consolidating around the 1.18 zone for almost the month now, and it has not really seen any strong move on either side. We have already considered the possibility of 107, sorry, 1.17 in yesterday's session, but that didn't really seem to be happening, and as of now it is trying to recover the lost ground and heading on the higher side. So now we have to change our thinking, and as the price action is indicative of the fact that because Mr. Jerome Powell has said that Federal Reserve is going to adapt and average inflation targeting region, so we might see the weakness persisting in the USD, and the euro is likely to benefit from this change in stance, and we might see Euro USD in due course of time again getting close to 1.1, 1.2 level or even beyond that. So if we are going to look for any trading opportunity in today's session, I think it will be better to look for buy opportunities as of now, as things are looking on the bullish side for Euro USD. And here, if we consider the pivot point series, the price action is concentrated in the upper band of this pivot point series, and though the regression curve is still pointing to the bearish undertone, but I feel that's more because of the sideways momentum with no clear direction, and because of that, after this deep upward momentum, we have seen this sideways tilt in the Euro USD's regression curve. But as the things stand, and as most of other indicators are pointing, we might indeed think about changing our stance from bearish to bullish, and as the time is progressing, and we are seeing fresh buying opportunities, fresh buying momentum building up around 1.18 zone. So keeping that in mind, I think we can adopt an bullish approach here, and on the lower side, we can think about this immediate swing low around 1.178, and if we get any buy entry, the opportunity to go long around 1.182 to 1.181, it should be good enough. We will have to take the risk of around 30 to 40 pips, and on the higher side we can almost target the levels close to 1.19, so that will also give us the risk reward ratio of better than 1 is to 2, and given the fact that this price action is being driven by the change in stance of Federal Reserve, we are more likely to see it sustaining and in due course of time. the 1.19 level might be crossed, and we might even see this momentum continuing towards 1.2 level. So that is the outlook for Euro USD in today's trading session. And if any of you have any query or any idea to share, you can write it in the comment section, and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. Have a fabulous day ahead. See you tomorrow. Goodbye.